Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going out there? It's December 13th. I'm Frank Curzio, it's the Wall Street Unplugged podcast. So break down headlines and tell you what's really moving these markets. You know, crazy times we live in. Just what's in the media lately, just the hate going on, just craziness. You know, it's a fight for page views and clicks. It's what the world's about, but still. And presidents of Harvard, Penn, MIT, I mean, you guys know the story by now. It's everywhere. Coverage everywhere, not just here. International, every place. Everyone's calling for the heads of these presidents. Not sure why they're not calling for the immediate departure of the entire boards. I mean, when I saw the testimony, the women all had the exact same response. They're clearly coached on. Right? They asked the same question. Does calling for the genocide of Jews violate Penn's or MIT's or Harvard's rules of code of conduct, yes or no? And they could not answer that question. They all avoided it. But I thought Claudine Gay was the biggest asshole of the three. I mean, she was just smiling and patronizing the response, saying, again, it's based on the context. So it's not like they misspoke or made a mistake. Maybe I asked these questions 2 times, 3 times. It was the same answer. Again, they were coached on it. Almost like a politician coach. You can't get a yes or no. Yes or no. They won't answer yes or no. That's the playbook. But it should be the playbook for institutions that are teaching our kids. So Penn's president, Liz McGill, is forced to resign. Harvard board backed Claudine Gay. All right, no surprise there. And of course, I love the New York Times. Got the New York Times to publish an article against Bill Ackman. Bill Ackman was very vocal on Twitter, just, really pissed off. Harvard alum calling for resignation. New York Times headline stated Bill Ackman's campaign against years of resentment. Bill Ackman was like, I don't resent anything. I still donate to you guys. So, but so far they've lost lots of donations. Look, it's this institution. What is it? $50 billion in their fund, endowment. But they already lost a lot of money. $1 billion. Some people are reporting $1 billion plus. Again, that's like $1 to you and me, but lots more is coming. I mean, you could put the fire out by just doing the right thing, and the fact that they were like, no, and they still backed her, I was very, very surprised. Very, very surprised. And how does this relate to stocks, right? This is not just a rant, but we're starting to see a big pushback for the first time in many, many years against leftist policies. And I was thinking, too, I went to school, I went to college, started at 27, I finished at 30. Just basically 3 years, and I was just not into school. I was a terrible student in high school. I think I graduated 420 out of 460 at Christ the King High School. Went there for basketball. I didn't make the team because I wasn't good enough. There was a lot of great people on that team, and I just wasn't good enough. But I really didn't care much for school. When I went to college, especially when I was older, it was really cool. I enjoyed it. I loved it. I think I finished with a 3.8. But there was one class where a guy gave me a D, and now I just remembered this the other day, and he was very left, where nobody really talked about left. This is a long time ago, right? I'm 50. And I never realized, like, wow, this guy was when Bush was president, hated Bush. And I just did a paper saying, some of his policies are good, it's good for capitalism or whatever, and not just trying to antagonize him or whatever, but I answered questions. I did everything I did that I was supposed to do to get an A in the class, and even, that I had good grades. And he gave me a D. And he didn't like me clearly because of the politics. And he would go up there and just like bitch about Donald Trump and this guy's, again, what they used to, not Donald Trump, but it was Bush back then, right? If he tripped on the sidewalk, it was Bush's fault. Everything's his fault. And but why are you teaching this to these kids? And I didn't realize. I was like, wow, how long this started. And you see it. And I bet so many people have seen it for such a long time. But now you've seen a big pushback. And for the first time against leftist policies, specifically, not hiring people based on that background, especially, showing that white people, right, regardless if they're more qualified for jobs, were just totally passed over. I mean, pretty crazy. I mean, it's coming to a head now because, hey, you know what? It's specific. And, you know, we have a lot of Jewish people coming out, but this has been going on for a long time. I mean, the 40-year-old white guy that's been successful, that tries to support his family, that busts his ass, I feel like, you know, holy cow, that they were like, you're like almost like the enemy for trying to help people. And I don't know how that reversed and how crazy that was. And we were called white supremacists. If you didn't believe in taking the vaccine, you were a murderer. You know, a lot of this stuff's been going on for a long time. But you're seeing this pushback, like the cutbacks in climate change now, spending on Ukraine. To get to in a minute. Companies coming back drastically on EV spending. You weren't allowed to do that. Now they are. There's this fight against the left that's having a big impact on lots of industries. EV companies, suppliers of the EV companies, wind, solar companies, pay close attention. Because we're seeing a lot of this industry, a lot of phase out of these leftist policies. And nonsense spending companies were forced to adopt to BlackRock and other companies, like forcing them to, the ESG policies. Now they're getting back to their actual jobs, which is representing their shareholders. And so Twitter CEO Elon Musk, right, saying F you to advertisers. I don't care. I'm not going to get blackmailed. UFC President Dana White said the same thing. Yeah, GM, look what GM did. Hey, even Ford. Ford said, hey, we're really cutting back on the lightning now. Something we've been saying for a long time. But look what GM did. Say, not only are we just cutting back EVs investment because it doesn't make sense, but we're going to announce a massive buyback, and look what the stock has done since then. Same with Ford. At least they're changing. They're like, okay, these policies don't work. We're losing billions, sometimes tens of billions in the case of the auto companies. Weren't allowed to really say anything bad about EVs. Now look at them saying, hey, we're cutting back, man. This is ridiculous. Pricing's not right. Demand's not there. The charges are not there. There's a market for this, but not the big market that you promised us, so we got to get out of it. They wouldn't have said that a year ago or 2 years ago, and that's a big deal. Puts GM on the table. Maybe it puts Disney on the table. I'll talk about that a little bit later. I mean, you have Iger saying, hey, you know what? We have to get back to what we're good at, which is storytelling. Enough of the political stuff. They're integrating with every Pixar movie and all these movies that you're integrating with. Now it's hurting the Marvel franchise, which that was a guarantee you were generating $1 billion a film for those things. But pay attention to this. As this change, it's going to be more profits, especially at a time where most companies are cutting back a ton. I mean, Spotify reported record numbers and said we're cutting 20% of the, 20%, I believe, maybe 15, 20% of jobs. I mean, that's what you're seeing. It's not like, oh, this bullish. It's all right, we got to cut costs in certain areas, and you're seeing this. Pay attention. It's a big deal. Also, not sure if you just saw the recent photo. It's in the White House of Zelenskyy, right? He's making his rounds, again, trying to start World War III, posing with the heads of the largest defense companies. Lockheed, BAE Systems, Northrop, Lockheed, like huge General Dynamics. Also, Air Environment was there, the largest drone manufacturers. You're familiar with that if you're a Curzio Venture Opportunities subscriber. This is a company started recommending, I believe it was like 2017, 18, $25 a share. And benefit tremendously. And now it's a 125, 130, recent 140, pull back a little bit. I mean, it's steel here. It's absolute steel. They're blowing out the numbers. But pay close attention to this as well. I mean, there's so many things wrong with that picture. I mean, it's so effed up. I'm trying not to get too worked up. Especially since none of the people in that picture, the dozen or so, defense executives that are posing with Zelenskyy, none of them are hoping for peace between the Ukraine and Russia, which I think as a human being, that's what you want. They're all smiling. They're smiling, like taking pictures with him. He's making his round. I need more money. When you have a guy saying, oh, Russia's coming after us and they're targeting nuclear facilities. We need help. This could damage the war. It's just like, holy cow, man, this guy really wants everyone. And Europe's going to accommodate him as well. I mean, this is a very dangerous scenario right here. Very dangerous. I mean, it's crazy, and people getting fed up with that. Most people believe, okay, enough of the funding. I mean, with everything going on and all the money going to that, it could help so many other things. I mean, how long is this going to take place? Is there a shot of them winning? Because right now, there's nothing. There's nothing for peace on the table. There's no resolve, nothing. Keep fighting. Everybody keep funding. Doesn't matter. But it does matter because now we're seeing tax policies, and I'll get to that later. Whether it's crypto, Elizabeth Warren, tax and unrealized gains. When deficits get out of control, all this is interconnected. This is interconnected with our environment. Where we said, hey, look at the defense companies. Right? Dan's been talking about defense companies for how long? And these guys know what they're doing. They want war. They make a fortune off of it, and they have the greatest business in the world, just like the insurance business, just like climate change. They have a business that the government pays for it, and the government does not give a shit about checks and balances. They're going to just pay the bill no matter what. Just continue to pay it. It allows tuitions to go up forever because they know that, hey, let's give all this debt to kids. Who cares if they're taking out $400,000 in loans to be a fourth grade teacher? Again, respectable job. But, yeah, that person's going to be in debt for the rest of their life. Who cares? We're still going to raise tuition. Why? Because government pays for it. Now, you've seen all this stuff intertwined, but now, air environment, you have to pay attention to some of this. No matter what side you're on or what you believe of different things, it's amazing when a lot of the truth starts coming out on both sides. And you start realizing, wow, a lot of this media, it's just bullshit. It's almost like you can't listen to it. So we're looking at the markets here. Stocks continue to ramp higher. 4 straight days now. Unbelievable November. Now having a great December. Could be 5 today based on what the Fed says at its policy meeting, which they're going to meet a little bit later, which I'm taping this midday. So you're going to get this and they already met. But the Fed's expected to say exactly what they've been saying. Way too early to think about rate cuts. Going to be data dependent. I mean, they got good data from the PPI that came out today, which was positive. By the way, by positive, that means it was negative, showing wholesale prices declining. Could mean that margins are going to contract for companies. Also, I mentioned last month when the PPI, right? You think prices coming down, that's going to be followed by, that's a positive. That's great. If you see that trend and you go back for decades, you're going to see that that's not a positive trend. When the PPI goes lower and wholesale prices go lower, it's not good for the market. You think, wow, lower prices. Not necessarily. Doesn't mean that the retailers are going to lower their prices. Have they lowered prices? No, they're still raising their prices. We saw it in the CPI. Again, you have this negative data out of the PPI, which is positive. And then again, I think everything's good news for equities. It doesn't matter. You have the CPI, right, still growing at 4% in the core level, twice the Fed's target. Unemployment rate fell at 3.7%, near a 50-year low. You're going to have economists that they're tearing apart the jobs data. A lot of inconsistencies with the healthcare component. And the strikes are over, so it's going to be... You have all this data already. You knew this. This should have been in your forecast, but all of a sudden, it's not in their forecast because CPI didn't come in as great as they wanted. But they had all this data again already. They should have just factored it in. But either way, at this meeting, Powell's likely going to say, we're still not thinking of lower rates anytime soon. Data's been encouraging, but inflation's not falling fast enough, and everyone in the world is going to say Powell's full of shit. And say they're going to say, well, Powell's going to start lowering rates, just like they've done for every single Fed meeting since January. Since January, the year. Predicting they're going to start seeing rate cuts in March, in June, in July, September, December this year. I mean, that's the bullish thesis of why stocks went high. We didn't see the cuts, but stocks are still at the same levels that they were since April. Really? April 2022. Think about that. Ukraine was just invaded. Started raising rates tremendously. We've seen how much craziness in the markets. I mean, now we're at 5.3%. We've seen debt ceiling debates. Seen a banking crisis in the middle of all that. A few crashes in the market that rebounded sharply. We're trading at the same levels that we're trading in April 2022. Isn't that crazy? It would be nice to just fall asleep and not pay attention to anything. Just wake up and be like, oh, my portfolio is like flat. We're okay. With all the nonsense and craziness. But now we're looking at rate cuts, and they're saying, well, it's probably going to be Q1 2024. Well, 2 weeks ago, before the CPI and jobs data was released, the Fed funds futures was pricing in 100% guaranteed we're going to have a rate cut by May. We've seen this before all this year. After this data was released, the percent fell to 40%. 40%. Based on what they saw in the CPI and the jobs data. So it might be higher now after the PPI. I haven't looked, which is at least this morning. But I'm not sure any of this really matters, does it? I mean, we cover this, and the Fed's futures are saying this, and the economists are saying this, and the economists will grow 2%, grew 5%, right, last quarter. I mean, we had 2%, 3% estimates like 6 months ago. We had earnings estimates were supposed to rocket higher, and we saw 3 straight declines in earnings, right? Earnings recession. And an earnings recession, right? Pretty much earnings have not grown since April 2020. I forgot to mention that. Earnings did not grow at all. For April 22, all those risks now today, we're trading at the same levels. But again, you're not sure if any of this matters. Does it matter what the Fed does? Because they're supposed to cut for at least 9 months now. They haven't, and stocks rode higher. Are they going to continue to roll high? I don't know. I mean, there's been a disconnect, guys, right? If you saw disconnect for the first time since 2013 that the major indices went higher or they outperformed the Magnificent Seven stocks. First time. That was on Friday. That was an interesting stat. But I don't know if any of this matters. Does it? I mean, I would think it does. I mean, we're able to call and say, listen, there's no way. If you listen to Powell and what he says, they're not lowering rates anytime soon. And I think you're going to see the same thing. I don't know how you lower rates and risk making the biggest policy error, which is on paper, right? You saw it documented clearly in the 80s that, hey, you know what? We're too quick to reverse course. Are you really going to, destroy your legacy? I don't know. Because you know what's up in the air is we have an election year coming. If they're going to cut, do you see it later in the year? So Fed is at a spot where you're not too sure what they're going to do. They're really trying to get that inflation CPI down to 2%. You're not going to get it down to 2%. Or even really well below, 2.5, 2.8, 2.7 before you announce a cut. You have to cut before that when it's 3% still, 50% higher than where you want it. So we'll be interested to see what the Fed does. But again, does it matter? I mean, I think it matters, but if you have the government constantly flooding the market with money where a lot of these, finance book that you've read on fundamental analysis over the past 30 years doesn't matter anymore because you have to factor in the government that's going to keep spending no matter what. A lot of craziness going on. It's good for stocks for now. Still seeing that seasonal push higher, which, again, we were in front of. I wouldn't say this is a bull market where you have most S&P 500 companies cutting their CapEx spending outside of maybe AI and also cutting costs through laying off workers. You don't see that in a bull market, but they're doing a good job keeping their earnings higher as sales aren't growing, and those earnings have stayed much higher than I thought for now, but we're still trading at 20 times forward earnings. So you better grow the 11% earnings that you're expected to next year. And you better get those rate cuts because now, where we're trading right now, it's going to be difficult to see the market go much higher without those two catalysts, without earnings growing and without the Fed cutting. So let's see what happens. Let's see if Powell gives any hints on what he's doing. I don't know. So, interesting story in the headlines is Netflix. So Netflix now reporting the stats of what movies and their shows, right, that its subscribers watch the most. And they're going to be reporting this data. For the first time, they're reporting this data, but it's going to be tracked every 6 months. I think this is a brilliant strategy. They were never really this transparent. A lot of these companies aren't that transparent. You don't really know what's going on outside of average revenue per user. Again, I'm very familiar with the streaming industry. I've covered all these companies. But this is going to drum up even more interest from potential advertisers. And advertisers may ask them for those statistics, but there might be some on the sideline and saying, wow, this film is seeing this, and we have products related somehow. It's going to result in, now that you're seeing this, more advertisers are going to be like, wow, you know what, I want to go to Netflix. And this is a new model for them. But also, this transparency is going to force other streaming services to do the same thing. And those that don't comply are going to look pretty bad. Because now they're announcing what we watch report. That's what it's going to be called, right? Coming out every 6 months. So this is 250 million plus subscribers on that platform. So it's going to highlight what they're watching every 6 months. Again, what we watch is called. And Netflix said The Night Agent saw 812 million viewing hours, number one. And The Mother, starring Jennifer Lopez, really good movie, was its top movie the last 6 months. But I thought the interesting stats came when they said 55% of viewing came from new content, while 45% came from original films and licensed titles. Now, I stream. I've been doing this for a very, very long time. My wife and I, that's what we've been doing for a very, very long time, right? We love Netflix. I love Max. Paramount's okay. And when I saw Disney Plus, I wasn't crazy about it because all the movies on there I saw already. And I think people who didn't understand streaming were like, wow, they have this massive library. It's great. It's not about your library. Streaming is 100% about new content. If you don't have new content, people are not going to stay. And that's why you're going to see tens of millions of people dropping off that Disney platform. Tens of millions. Because not only were they getting this service almost for free, but when you look at it, you're looking at a service that people weren't too crazy about. Again, given at a very, very low price. But now what's going to happen? Now you're going to throw ads all over it and raise the price. That's why it's kind of dangerous. But also, it's why many industry leaders, when it comes to new content, original content, it's why they're getting into sports. I mean, Apple, Amazon, Max, which is Time Warner, Netflix, they're broadcasting sports now. Netflix is just starting, getting into tennis. Nadal, they're going to have an event. They had, I think, a NASCAR event or Formula One event recently, Netflix. That's why Disney's trying to sell ESPN, and nobody wants to buy it or partner with them because it's a service that it's a middleman service where why am I going to go to ESPN when I can go directly to NFL, NBA, NHL, MLB, and sign my own deal with them? What do I need ESPN to partner with for? And yes, they have certain rights, but they're trying to get rid of a lot of that stuff. But I think it's a big negative for Disney, and I don't think shares are terribly expensive based on sum of parts, which is why you've seen some value managers come into it, and I get it. But if you're buying Disney, remember, it's a cost-cutting story. It's not a growth story because the best content doesn't come on their platform. Doesn't come on the Disney Plus platform. It comes out in the movies. So what's going to make you go there and actually watch it? And they're not spending enough. They're spending less on new content. So it puts them at a huge competitive disadvantage to the biggest players in the industry. And that's fine. That's okay. If you're like, hey, I'm starting a streaming platform like Apple. Like, that's not their core business or anything. But Disney's going all in. This is their growth model. This is what they're telling everyone of how they're going to grow the business. They're cutting costs. They reinstated some of the dividend, a small dividend, which I think is crazy with their expenses. And you got to pay for Hulu. You're buying the rest of Hulu. And I think, I just thought it was crazy. As Iger was saying, oh, well, we have to see. We did a lot of thinking behind this. If we're going to purchase it or, look for another, I don't know if there's someone else to buy it. There's nobody else. No one's going to buy it for that price. Was it $8 billion? For the rest of it, that's not growing the subscriber base anymore. And Hulu's based on what? Hulu is based on live TV, which YouTube's on fire right now. I mean, you have several services out there now, not just Sling, but it's services that provide live TV. There's so many competitors. So you're attaching it to the Disney bundle. It should, for me, get out of that growth model. Look what GM did. Listen, all right, we're done with EVs for a while, okay? We're going to take that money, that 10, 20, 30, whatever $1 billion, and we're buying back our stock. Look what happened to the stock. But that's Disney's growth model. I just don't get it. I mean, I like what Iger is saying, and we have to go back to storytelling and things like that. And again, on a sum of parts basis, I see it, but I mean, I would rather buy Google. I'd rather buy Apple. I'd rather buy so many other companies that have a massive growth model, so many businesses that are working. You could still get the media part of the business, but you don't have this streaming platform that's at a huge competitive disadvantage to the rest of the industry that you're saying, that's my growth model. That's what we're going in when you can't compete with the big guys. I just think that's crazy. So good job by Netflix, separating themselves again. Hey, here's the data. Let's see what everybody else reports with their data. Let's see how many people are watching their shows because they have the most new content. And when you have the most new content, spending $30 billion plus, like Max as well, spending $30 billion plus, and you have the other companies and the other competitors spending a lot less, that's a figure that's very smart to show of how much demand they're seeing, how many hours review it. That's huge. I mean, that's taking control of the advertising industry. That's becoming the Facebook, basically, the meta of streaming when it comes to advertising. Good for them. I think it's huge. Now, turning to a new story, not that new, I think it's the biggest story of the week by far, is Elizabeth Warren. I mean, last week, right, started last week when she was questioning Jamie Dimon. Daniel and I talked about this in the podcast. Jamie Dimon was like, hey, if I was running the government, I just, get rid of crypto, get rid of Bitcoin, get rid of everything. But she used that platform saying how Hamas has raised $130 million in cryptocurrency to fund its war about Israel. So it was no surprise this week. What did she do? She used that. She used that and said, we're calling for new regulation. To be fair, it's not new regulation. She came out with it a little while, I think in June. It got shot down. So she's reintroducing her Digital Asset Anti-Money Laundering Act. That's what it's called. So it basically requires software makers, all crypto companies, because most of them are software makers. So this includes miners, validators, wallet providers even, who do not take custody of assets. And she's forcing banking rules on them. So they're going to have the same requirements as hedge funds, banks, and make sure that every person and client they do business with has to register digitally with the government, showing that they are AML and KYC compliant. You don't have to do that for everything else. I mean, it's, I understand securities business or whatever, but when it comes to the entire industry and doing it, it's going to really crush the industry. It's going to result in very little innovation. It's going to result in all of crypto going to all the other countries, which we started to see earlier this year. Now the U.S. and ETFs coming and stuff like that, which are great. So basically, she knows that crypto, right, this technology, it's fascinating, is extremely disruptive to the banking and finance industry, which has never been disrupted. I mean, you look at the banking industry, they don't create anything other than exotic products, right, which lead us to credit crisis and stuff like that. But they don't. They charge massive fees by being a middleman and getting people together, for the most part. And look at their research divisions. What is it? 90% of them have buy ratings. There's a reason they get investment banking. It's a pure conflict of interest. To have a buy rating on a company and I'm looking to raise money, you have a buy rating. I'm not going to go to the idiot that has a sell rating on me. F you. You want my business? You better have a buy rating on it. It's a total conflict of interest, so much so that they have it in disclaimers. The most fascinating, biggest bullshit industry in the world. It's this boys club. But you want to push this industry back to allow the banks to play catch up? Hey, that's fine. Similar to what the government did earlier this year to Silvergate and Signature banks, who they put out of business. These are Wall Street institutions to open a door for a lot of these other institutions like BlackRock's, Bitwise, all these names coming out with Bitcoin ETFs. Expected approvals. But when you look at Silvergate and Signature, what happened? These were banks. What they did was totally illegal, right? They're being fought on this, right? They're getting sued about this. It was totally illegal what they did to these banks. I mean, they shut down the banks with no evidence of fraud. And it's a lot easier to tell all the clients, everyone does business within these banks, to say, hey, don't ever do business with them or we're going to audit you. There's actually emails of the government saying this. We're going to audit you if you do anything within crypto. That's why even the banks that had a little bit of crypto, they got rid of it. Even me, they threw me out of Bank of America because I had one transaction, a crypto transaction buying virtual real estate, which accounts for, again, my business is selling financial subscriptions. They didn't even give me a chance to explain anything. They just threw me off out of the bank in a month without any explanation. I called, it was an answer machine, say, it doesn't matter what you say. I played it for you guys on the podcast. I couldn't believe it. But it's a lot easier to tell the clients, hey, don't do business with them or else. And then watching their bank ratios fall below the required percentages, right? Those percentages created Dodd-Frank, which are very high. It's what the banks are fighting for, to get them lower. This way they could, release more capital and do more stuff with the capital and balance sheet, like keeping it on the books. But now you basically forced them into liquidation because they couldn't keep up with those ratios and regulations. They knew exactly what they're doing. They forced these two crypto banks into liquidation to shut down. But this isn't the banking industry. It's trying to target everyone. And again, this comes from a person, Elizabeth Warren, who believes Americans should be taxed on unrealized gains. I don't know if you understand that or not. I hope you do. How ridiculous that is. I mean, probably the most idiotic proposal that you will ever hear, ever, out of anything, Washington, and one that would absolutely crash the stock market, crash asset prices, like the housing market, since you're paying taxes on assets you didn't even sell yet, based on where they are in the market, and they could be high one year, oh my God, I got to pay taxes, and low the next year, and then crash for 3-4 years, and then go up. I mean, shit, imagine if Berkshire Hathaway had to do that. Imagine if this was implemented 20 years ago, and Berkshire Hathaway would be 1/20th of the market cap it is today if those laws were in place. I mean, you're insane. Anyway, Warren, smart politician, used the Hamas angle and the 130 million cryptos used to fund the war. Right? That's what she said, to reintroduce this bill. It's like crypto is a national security threat. And whenever you hear national security threat, that's a term used by the left when they want to cancel something or somebody, right? National security threat. And it's funny how Bitcoin fell 5% the day before this announcement. I actually think it fell more than that and came back, right? Recouped at least half those losses. I think it was like down 7-8% came back. Below 40,000 now. I think it's 41, 42 after being at 44. But who cares about that? It came out a day before Warren came out with this. But one problem with Warren's statement about Hamas is it's a total fucking lie. And she cited data from an article in Wall Street Journal, which leaned heavily on blockchain analytics firm. This is a big firm, Elliptic, right? That was their source. Now, Elliptic and also another firm called Chain Analysis, right? Their job is to help the government identify illegal activity on the blockchain. That's their job. So they have a huge financial incentive to do this, to play up that link between crypto and criminal activity, right? That's their job. Yet both of these guys, both of these analytical firms came out and said that Warren misinterpreted the data from the Wall Street Journal. So you had Chain Analysis. I mean, they had to say this was wrong because last month it published a report. This is along the American Enterprise Institute. They highlighted that crypto accounts for less than 1% of all illicit finance worldwide. They published this a month before. So they had to come out and say, whoa. You know, Warren doesn't know what she's talking about. So Elizabeth Warren clearly lied. There's evidence of it that she lied. And these two firms are even citing it, who are on her side and saying, no, that you're misrepresenting these numbers. Doesn't matter anymore, right? We live in a world where politicians can now lie. You can go on camera, you could steal something, lie, whatever, and get caught, and you don't have to apologize. Never apologize. You're fine. No, I didn't do that. You don't know what you're seeing. You didn't hear that, right? That's not me talking. You also see this in journalism as well when it comes to major media enterprises. And so don't expect an apology or retraction from Senator Warren anytime soon. You have the banks paying her a fortune lobbying dollars to stop this crypto freight train from running over the banks. But you know what? They can't. They can't stop it. And they're starting to realize that. It's a big part of this theme. But the banks are being forced to adopt this. Another story I thought was interesting regarding crypto was yesterday I watched CNBC, and the CEO of Cantor Fitzgerald went on there and said he really likes Bitcoin. You're going to be surprised, but I like Bitcoin. And he goes, not crypto, it's garbage, just Bitcoin. You could tell he really knows what he's talking about. But he goes on, he goes, look, there's this Bitcoin halving coming up. He's explaining it, where it reduces supply growth. And Bitcoin always goes up into this event and after, and I think it's going to go much higher from here. And you'd be smart owning Bitcoin. And I think, you know, their firm takes custody, I think, of several, it's Tether or stable coins or whatever. But he was highlighting Bitcoin and basically shit on everything else. Like I say, you could tell he didn't know too much about it. I mean, this is a catalyst I was highlighting 5 months ago when Bitcoin is at 28,000. Tell you why you should aggressively buy it along with all the Bitcoin ETF filings coming, right? I'm not patting myself on the back, but I love to see people make money, right? That's why you listen to this. That's why I want to help you. That's my job. If not, you're not going to pay for my services or whatever. We're going to get paid by companies. We're independent. So I highlight being right. It's because I'm excited. It's because I love making you money. That's my freaking job. So you pay me for. We also recommended Ethereum in early November, up over 20% on it. Galaxy Digital, another one recommended based on Bitcoin ETFs coming and that big catalyst. It's up 40% of us in Dollar Stock Club. If you're a crypto intelligence member, Ethereum is something that we recommended in, I believe it's 2019, early 2019, up over 1,400%. I mean, how many stocks can you say that about in your portfolio? And maybe if you bought something at the absolute bottom during a COVID crash or something, you might see a couple of small caps that rallied over 1,000%. But even if you bought large cap tech stocks when they pull back significantly, Meta pulled back to what, like 100? I mean, Nvidia pulled back sharply. I mean, if you bought those, you're up 100%. I mean, 200% in Nvidia, right? It's the best performer in the S&P 500 this year. But I'm highlighting this for several reasons. So number one, you're going to see this massive marketing blitz everywhere from the $1 trillion asset managers who are about to get their Bitcoin ETFs approved. Massive. It's going to start in January. It's going to go through March. 13 of the asset managers launching Bitcoin ETFs. It's BlackRock, Bitwise, iShares, ARK, and Grayscale are probably going to be first. Let's see. Franklin Templeton, and iShares. I mean, that marketing is going to be very, very, very good for crypto. And it's also going to be fueled by the Bitcoin halving. So the Bitcoin halving, Bitcoin ETF approvals, we're under the impression, okay, these two catalysts are really going to send Bitcoin and Ethereum higher. And that's correct, but it's not just going to be, it's not limited to them. You're going to see more money pour into this industry. And when that happens, it's going to start flowing to a lot of other cryptos, especially since a lot of the garbage is gone. There's still garbage in there, but man, you had to see it 8, 7, 6, 5 years ago, 3 years ago. I mean, just on every podcast, I would just 10 freaking. It's not that the technology wasn't great, but there was no link to their token. And Uniswap's a huge name. Their token is absolutely worthless. You get nothing from holding the token. Nothing. Absolutely nothing from holding the token. Technology is amazing, so there's a big disconnect there. The token is actually worthless. There's no utility feature. It's worthless. And I've seen so many of these. But now you have FTX gone. You have Celsius. Binance after CZ stepped down. Not so much U.S., but, forcing, if you are going to work in the U.S., more regulation, transparency. You're looking at dozens of other cryptos that are going to see gigantic moves over the next 12, 24 months, probably over the next 6 months. And it's not just going to be limited to 12, 24 months. We're talking about 5 years, 10 years. And there's a fundamental change going on with this. And the amount of people, tens of millions of new people, IRAs, 401ks are going to have exposure. You're talking about tens of trillions of dollars having exposure for the first time. You don't need a large percentage coming in from that. But we've seen some amazing moves just over the past 4 or 5 months. We've been very aggressive with crypto, which was hard because we got the shit kicked out of us, like everybody else, while all this took place, right? I mean, bankruptcies and the bank failures and all this nonsense. And look what crypto, like surviving that is unbelievable. It wasn't easy to be pushing that and saying, look, there's a lot of catalysts coming up, but it's not just those two. It's going to lead to so many more things in this industry. Like Ethereum ETFs are coming. Structured ETFs within crypto are coming. More innovation, more technologies. I know there's a lot of crazy stories out there in crypto, and you hear the negatives more than the positives. So on Tuesday, December 19th, this is 7 p.m., guys, holding a special event called Crypto 2024. It's live. It's free. And you can register at www.CurzioCrypto.com. Again, it's free. So during the event, I'm not going to be holding back. And it's going to be live. I don't care. But I'm not going to hold back on just debunking a lot of the BS you've heard from Jamie Dimon, regulators trying to shut down the industry. Now it's a terrorist organization. I'm going to cover why every bank is scared shitless of crypto right now. Because right now, this is their Uber moment. It's a moment that the taxi industry saw Uber's model and realized, holy shit, we've been freaking robbing and screwing investors or clients for such a long time. People jump in the cab. They used to just take them wherever they want. The thing used to. Now when you go to airports, notice if you take a taxi, that you know how much you're going to get charged before you even go. So, I mean, it's not safe. You don't know who you're getting in there with. There's the medallions, the whole boys club within it. And now you have this thing that was simpler, that was easier, that was cheaper. And they're like, holy shit, this thing's going to scare well out of trouble. That's where the banks are right now. Because, again, the banks don't create anything. The banks are middlemen. And middlemen have incredibly high margins, haven't been disrupted, and now you're finding a new way that's faster, easier, safer on the blockchain. Not talking about the hacks that happened during bridges and stuff like that. That's technology that's allowing blockchains to talk to each other and communicate each other without having the bridges, which is where all the hacks take place. This is fascinating. That's why Swift is currently using this technology. It's the biggest digital bank system in the world. Transfer payments, global payments, 11,000 largest banks in the world. And not only that, it's going to cost much less than what banks are charging. That's how you disrupt industries. So Crypto 2024, I'm going to be showcasing how this time is different. I'm not used to these ups and downs in crypto. These massive boom and busts can make you crazy. And average position on Crypto Intelligence Newsletter was up over 600%, average position. And it wasn't like we're talking about lots of positions. I think 15 to 17 were in that portfolio. It was like rocketing. And then we went from that to a massive collapse in the industry, which was terrible. But you're not going to see this going forward. And the fundamental secular it's an inflection point. Again, tens of million people, tens of trillions of capital gaining access to crypto the first time. But you have to get out of the notion it's just going to go into Bitcoin and Ethereum. They're going to benefit. But in the finance industry, you're talking about hundreds of trillions of dollars at stake to find a better place. Where could you earn more interest? Where is the easiest transfer of payments? How is it safer? How is it quicker? How does it cost less? It's going to be big names that capitalize off of this. Again, you look at the bond market, you look at the real estate market, you look at tokenization. That's why all the major banks are launching their own blockchains, why pissing all over the industry. I mean, come on. Talk about hypocrites. I'm going to share lots of names with you. The best technologies funded by some of the biggest and best venture firms, billionaires. The ones with the best token structures. Again, got to pay attention to that. A lot of companies. And if I'm right, especially on some of these names I'm going to share, it's going to lead to potential gains that could be life-changing. I don't say that lightly. Again, I'm talking about something that you can register for free here. I'm not selling you anything. Because of the 8 years covering this industry, I've said this over and over again. Every investor should have some exposure to crypto. I've been doing this for 30 years in the stock market. I've never seen gains that I've seen within crypto. And that's what you want with your speculative capital. Don't take all your capital and throw it in it and then say Frank's an asshole. I'm not talking about that. I'm talking about taking 10% of your speculative capital that you go into small caps or whatever and throw it into crypto. Because that's the lottery ticket, except you're not going to have the win-lose 100% downside. Maybe in some of these things, but you want to limit your exposure and try to limit your risk. Maybe take small position sizes, things we do in our Crypto Intelligence newsletter. But the gains that you can make in this sector, you can't make in the stock market. I'm not just like cherry picking. It's hundreds of names in this space have seen gains of 1,000x more, 5,000x more. I'm saying, why? Why are they up so much? Because you can invest in many of these names at $20 to $50 million valuations to become billion-dollar companies. I mean, name the last company. I mean, very few of them. I mean, there's some that come in, IPOs you're not going to hear of, but most of the high-growth names and whatever technology that they're into are going to come out at multi-billion-dollar valuations trading at 20 times sales. Again, that's a liquidity event. They're going to do a marketing show, a road show, hype the shit out of it. This way, investors are buying it post-IPO while those insiders are selling it to you. But you're buying these things at multi-billion-dollar valuations. Wouldn't it be better if you bought it a lot earlier? That's what crypto has to offer. I'm going to show you how easy it is to open an account on real platforms. I'm going to dial it down because this technology, a lot of this industry, I have to read this stuff 3-4 times to understand it, but it's fascinating. It's fascinating. It's not going to be this, what the hell is going on? You're going to dial it down, make sure it's very easy for you to understand. Again, event's called Crypto 2024. I don't do this often. We don't hold live events often. It's live. It's free. And you can register at www.CurzioCrypto.com. So, again, sure to register. We have hundreds of people already registered, which is really cool. Happy to see it. But also, you'll be able to send in questions because we're going to do a Q&A, and it's going to be fun doing it live. You'll see it live. You'll see the timestamp. It's going to be cool. I like doing it live. Hopefully, the technology holds up and nothing goes crazy. But right now, we're seeing, hundreds of people come on. We just started marketing it. But, you have a week. So definitely register. Send in some questions. I know you have lots of questions, but this time is going to be different. It's an industry that I've followed for a long time. It's going to be, again, it's not going to be straight up or anything, but this isn't driven by hype. This is driven by fundamental changes of trillions of dollars going to have access to this industry for the first time and disruption. And you can't stop it anymore. They tried to stop it. They're trying to. Now they're going to start regulating it a little bit more. Not through Warren and lies and bullshit of Hamas and $130 million in terrorist funding and stuff like that. Again, she got to tell you lies to get her point across, but she got called out by almost everyone in crypto. You can go and Google it, and she hasn't retracted. She hasn't said anything, which, again, even the people that actually published that data say you're misinterpreting it, and she hasn't come back and apologized about it. But again, it's all about politics and things like that. Use it to your advantage because as, Bitcoin took a little bit of a hit on that. I was able to buy it. It's up now. I think 2024 is going to be an incredible, incredible year for crypto and going forward. And there's still a lot of great names in this space that are trading down 70, 80%. The Microsofts, the NVIDIAs of the space, great technology, great management teams that just got annihilated because a ton of forced capital, right? You had forced capital where places were closing, capital coming out of these names to cover margin calls and things like that. You no longer have that. You no longer have that. So you see most people own Bitcoin are people who have been holding it for a long time. It's at the highest percentage that it's ever been. It's over 72, 73%. People who own Bitcoin are people who have held it for a long time and they don't plan on selling it. That's why when you're looking going forward, I mean, the Cantor Fitzgerald guy is right, but that's a story that's been, around for 5 months easily and even longer about the Bitcoin halving to reduce the supply growth. But a lot of catalysts coming up in this industry. I want to try to position you and help you out and answer your questions. Just I'm getting a lot. So December 19th, 7 p.m., live, free. We don't do events like this often, so I'm really excited. I like to do live stuff. So make a mistake, you guys can make fun of me or whatever, but hopefully it comes out good. I have a lot of great details, information, stuff I'm going to cover, and again, I'm not going to hold back. So to register, CurzioCrypto.com. So guys, that's it for me. Questions and comments, FrankCurzioResearch.com. And for Wall Street Unplugged Premium members, see you guys tomorrow.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.